Today we are talking about road-tested tips for getting smarter with your money. So we're trying to focus on stuff that we've done or stuff we know that you've done or we've heard about that definitely works.
Yep.
And we want to share that. But first, Pete, when we're talking about getting smarter with money, if you search online for getting smarter with money, what tends to turn up?
Look, I think because online is a bit more, obviously a bit more salesy, a bit more growth focused. Smarter with money will bring up things like, are you investing? Go see a property spruiker. It will be more about what to do with your money if you've already got a little bit extra of it and you want to invest it. So I think we probably just need to have that distinction about smarter with money can also imply how am I investing my money? Whereas I think today we're talking a bit more about before it leaves your household, how have you gone with your money? How have you enabled yourself to have, hopefully, a little bit extra to be able to invest?
And there's all these sorts of budgeting frameworks, for example, that do the rounds, envelope systems, 50, 30, 20.
Yep. That adds up to 100. That checks out.
Have you done this yourself, or have you known people that have tried to do this kind of budgeting framework?
I've definitely seen the buckets and the 50, 30, 20, like Cat Money that I was a part of as a money coach, talked about...
Cat Money?
Yeah.
Christians Against Poverty?
Yes. They talked about having a certain percentage of your money allocated for bills, and, that might be 30 to 40%, and then there might be another 30% for, other living costs, and then there might be 10 or 20 for savings and future investment. So the advantage of that is it gets you thinking about the fact I can't have 100% of my money for fun stuff, but also 100% of my money does not need to be for bills. So I think that's a big thing for people to take out of this is your money can be apportioned. It needs to perform a lot of different roles. You need to think about how you would split it in a budget.
And that has worked for people?
I've seen it work. Yeah, it works best when people are aware of that because they can plan for it and say, if I know my car is going to cost $2,000 this year to register and insure before I even put any petrol in it, well, that's $40 a week. So I probably need a car account or a bills account because they're a bit of a sleeper. Your car's going fine. You don't get rego insurance. Bang, bang. Then they come and they're due the next month. So that's going to happen every year. It's not really a surprise. The question is, are we planning for it? And are we perhaps allocating and putting that money away? And I'm an advocate of whatever system works for you that's sustains you, doesn't drain you, would be a good way to do it. If it's electronic, if it's Excel, if it's old school paper and you talk to your partner about it at the end of the month, do what works.
We got some other road-tested tips that came through the Money, Faith and Finance Facebook group. Thank you very much. Going to share those very, very soon. Before getting to that, Pete, talking about budget frameworks from the kickoff, is there one called zero budgeting?
Yeah.
Is that the same as the 50, 30, 20? I get confused with the names.
I think zero-based budgeting, the theory is that all your money comes in and is allocated and emptied out every month. So a person that might make $1,000 a week would say, well, I've allocated 500 for bills, 300 might be for, running expenses, running my car and rent, and the other 200 is for savings, but they physically make that happen and kind of bring it to zero and reset it.
Right. You've met the zero people?
Yeah. And I met a lady that would listen to the pod. We had a discussion yesterday. And
you met a lady who listens to Money, Faith and Finance?
Yes. Yep.
Fantastic.
Yep.
Was she related to us in any way?
She wasn't.
Wow.
Full disclosure, was no relative, and she wanted a bit of a reality check and a bit of a financial health check. And
awesome.
To be honest, she was already doing everything we'd ever advocated. I couldn't. There wasn't much I could tell her to do. She had a will, she had a property, she had super. When she'd already updated all the details on a super, she had some ETFs. She was doing zero-based budgeting, so she was allocating her money. She had a budget in there for tithing as well. The lady was awesome. She was doing everything, and I think it was a good example of someone on a moderate income. That wasn't a flashy income. She was by herself. It was just her, but she was able to make her money work for her. And I thought that was a nice little timely reminder that it's not about how much you make, it's about how much you keep and how you allocate it.
And it also seems to help at least Stephen in the Money, Faith and Finance Facebook group to not just do this one-time set and forget, but Stephen's suggesting doing a monthly audit has worked for him.
Yeah, okay. Yep. Audit. Yeah, that's a tough word because I'm an accountant and we think of auditors as the boring people. But an audit's tough, but an audit's
more boring than accountants.
I know, it's tough. It's hard to imagine, mind blown. But
that's like a boring competition.
An audit's like
they won.
Yeah, they did. Yeah. But we'll get them next time. The audit's a deep dive. It's going back and saying, well, that was the month. How did I actually go? And almost comparing and contrasting and saying, I said I'd spend 100 on takeaway, but we spent 200. Well, why? And what would I do different? So I think, yeah, the audit is best practice.
Stephen said exactly the same thing, giving that example that he says that he was accused of spending more on outside food takeaway stuff. So it did help to bring some spending to light and data to refute claims.
He does sound like an accountant now. Go on, you,
state that things have changed. It was easy as bank transactions are in Excel, labeled every transaction. My wife is awesome at doing that as well. We've got this epic spreadsheet that she created years ago. And similar to what you were describing with the 50, 30, 20 and the zero and all that sort of thing, she has apportioned pretty much everything that we ever spend across a whole year in this spreadsheet, from weekly groceries to insurance to the expected cost of running a car, including the possibility they'll need maintenance, all of that sort of thing. All these like sinking funds basically built in.
Okay, that's next level. Like
but in terms of helping with keep track of things and definitely helping me be smarter with money, it's been wonderful. But it's also something that we do somewhat regular audits on, but not monthly, like Stephen's pointing out.
Monthly's a big call. I think it needs to be something that's manageable that you'll actually do. The advantage of his monthly scenario is it's easy to correct. It's a smaller correct than going too far off course. So you can nip it in the bud after a month. And generally, picking on his takeaway example, you don't need to wait 6 months to know you're doing a lot of takeaway. We've only got to look at our waistlines and our bank accounts.
Well, Stephen does, because that was the data that he needed.
Yeah.
And he does point out that now, after having done it for 6 months and audit, it's now pretty much down to like 15 minutes a month of going over where he's at and what's happening to get a better picture, rather than, because audit to me sounds like, my goodness, it's going to take me the rest of my life to sort this out every month.
You've got to refine the process, and it's got to be something that works for you and something that maybe leans into your sort of skill set and your interests. So I've got some friends where they like knowing how much they can save. We talked before on the pod about a Freddy Frugal Friday, where it's about, you gamify it. You make it fun to go, what can we save? What can we cut? Like, I like finding out that I can save money on a green slip or some insurance. I don't mind. You can do these things online. You can get a second quote for something. I don't mind secondhand over new. Like, make a game of it. Make it fun. And then invest the rest.
What we're also talking about now, speaking of monthly audits and the like, and getting smarter with money and road-tested tips, you are a fan of automation, are you not? So if I'm checking things out on a monthly or whatever basis, would I also be checking out what I have or have not automated?
I think so. I think it's good to do. Like I said, a lot of us are busy. I just think make it happen and take the emotion out of the decision. Like if you said to someone, you got to decide to give $100 this month, or we talked before about a charity that I've been given to for 30 years. I haven't had to think about it and make the payment. It's just been a direct debit for 30 years, and it just happens, and they index it a little bit every couple of years. You want to take the emotion and the decision making out of it. If it's something that's important that needs to be paid, it frees up your time to do something else. So I think where possible, I'm a fan of automation. People think they're too busy to do things and look at their budget. We've got busy days, but across a month, we've all got the time to look at something. Our days are busy, our months and years are not as busy. There's always time to look at this.
And at the risk of going into now part of a conversation that could be just described as common sense.
It's just common sense.
In the Money, Faith and Finance Facebook group, Derek's written in there about buying reduced priced items, the ones that are about to expire at the supermarket. Like, that's one way of saving money, which opens up, unlocks the common sense bracket, insofar as that's a great move to save money.
It's not hard to do, right? You're still at the supermarket. You just got to get the stuff that's about to go off and go put it in the freezer or have it that night.
Road tested, and as soon as you get to the checkout, you can tell that you're saving something. You've got smarter with money, but it unlocks everything from meal preparation to planning ahead on X, Y, and Z, so that you don't get caught out in the moment of, oh no, I didn't prepare for such and such, and now I'm having to stump up however much.
And it doesn't need to be a drag either. It can be a case of, that's a great example of Derek's. And it can also be shop your pantry. That's what we've been saying at home lately is, okay, what have we got at home that we can cook before we go and get more groceries or go out? Even with takeaway, think of takeaway as a treat, not a cheat. It doesn't have to be, we can't be bothered, let's get takeaway. It's like, what? We've cooked most nights this week. That's our treat. That's our treat on a weekend or a Friday night. It's not the cheat because we haven't thought about it. A little bit of thought before can save you money, and then you can have a better takeaway or go out for a nicer dinner. You can redirect those funds that you saved into something else later.
Have you yourself or any of your clients, mates that you've talked to, experienced, though, a bit of burnout when it comes to you've been doing all these things to save and get smarter with money, and it's great that they're road tested and they're really working out, but then you get to this point, you hit a wall of like it just feels like more work, more effort to even try to keep doing these things?
Yeah, look, I think like most things in life, you're going to have setbacks. You could have setbacks in your investment, your job, your finances could change. We've got to suck it up and get through that. And also too, if you think of exercise and our physical health, we can't ever just take it for granted. You know, I've noticed getting older, you have to try harder with exercise to be the same weight and health that you were 10, 20 years ago. Like, we can't take it for granted. This is a constant ongoing thing. And that's a struggle with finance because it's never totally sorted, but it's also an opportunity because every day is a chance. Reset your budget, reset the way you think about money, fix your problem of yesterday. Every day is a chance as well. So yes, I see setbacks, but there are also opportunities as well.
We love hearing from you always at Money, Faith and Finance. So hopepodcast.com.au. Get in touch or through the Facebook group, Money, Faith and Finance. Road tested tips, keep sharing them here about how you've got smarter with money, what's really worked for you. Let's share it with everybody else. That'd be wonderful. Pete, I know that you've got some thoughts on saving, and I know it can sound a bit boring what you're about to say.
Thanks. Great intro, bro.
I'm just preparing everybody, but also
saving money ain't boring, people, just saying.
Listen through what Pete says, because he actually says something really quite interesting. Okay, but as we're heading towards that, some other road-tested tip suggestions in the Money, Faith and Finance group include a very short one from Naomi. Start using cash 100%, more often.
Yep.
That's worked for Naomi.
Save the fee that is at most shops. My wife and I started doing that on weekends and going to the ATM, take out cash and use that, especially at small shops that I know would value cash transactions instead of necessarily adding on a surcharge.
And Jonathan, I don't think I'd heard about this specific account that he's referring to, but just saying that when he was on a lower income and he wasn't saving at all, a friend of his told him about this account that you can't access your money directly straight away. A little bit like a long-term investment.
Almost like a term deposit.
Deposit. But this one, is you need to access it 32 days in advance. You have to give them a month's notice before you can get your money out. But Jonathan says it really helped him on a lower income as he wasn't saving. And at the end of every month, he was spending what was coming in.
Yep.
But his mate pointing him in the direction of this account, he's found it's relieved a lot of the stress that he was feeling at the end of every month, repeat, where I don't have the savings I want to have. Jonathan is pointing people towards, if you're in a similar boat, of doing something. Talk about pre-planning, like getting ahead of your own game and putting money off somewhere else where you can't actually access it.
And it probably freed up the mental load too, right? Like, I can't buy this. This is not a live decision for me for the next month. So at some level, that would take a bit of pressure off. You know what? I can't spend this money.
Okay, I've delayed it long enough, Pete. As we get smarter with money and road-tested tips, what's this boring thing that you want? But it's really, really helpful.
It's really good. Look, inflation. We all know about inflation.
Oh, my goodness.
I know.
We started with inflation.
We hear about it. And what it basically means is things cost more over time. The simple example I've got is if you want to save $50 a week, that's great. But if you want the spending power of that $50 to be the same and inflation's about 3.5%, well, guess what? Within 5 years, you're going to need to be saving $60 a week. And within 10 years, you're going to need to be saving $70 a week.
Now you're getting more interesting.
Just to be in the same spot as if you did 50 today. So that's an increase of like, you've got to be putting away another 20% within 5 years or another 40% within 10. And most people think, geez, that's a lot of extra money. Well, in reality, all your other bills are going up with inflation. So they're not hanging around waiting for you to decide. They're going up each year anyway. Hopefully your pay is going up and your circumstances might change. But I guess the challenge out of this is you need to index your savings, people. You can't just say, I put in $50 a week 10 years ago and that's all I'm doing. If your pay's gone up and your situation's gone up and you've got a bit more money, you need to index it and put more away, because your savings is basically you're packing your bag for future you, for the trip that future you is going to take. Well, when you open that bag, when you retire, or when you hit this point, it needs to be packed with money that you're going to spend then. And that money then is going to be more than you put away today. So you need to index your savings.
From the future to now, Pete, show me the money, talking about road-tested tips for getting smarter with money.
Yep. You got to use a system that works for you. Just pick something you can keep it simple and you can keep it up. That's what you want to do. No judgment, but a nice bit of accountability, and have a goal. A goal keeps you focused in the tougher times. We've got a lot of stick here. We're talking about budgeting and some very dry stuff. We're throwing in audit as well. You need a carrot. It helps if you've got a goal, something you're saving for, something that helps you know when you've got there as well.
Pete Burrows, accountant with Lower Russell and Farr in Greater Sydney. Thank you again, as
You're
always.
welcome.
And thank you for being part of the money, faith, and finance conversation. Get in touch. You might have something going on in your household. You might have a particular challenge or a joy.
Yeah.
Either of those, any of those.
Wins and losses, people. Happy to hear both.
On that whole spectrum, we love hearing it so we can share it with everybody else.
Yep.
As we connect the profound and the practical of wherever money is landing for you. Also, you can be landing episodes of Money, Faith, and Finance all over the place. Your family, friends, people you don't even know. We don't mind. We're not that discriminating.
Yeah, no.
Just want to get the money, faith, and finance word out there. Very much helped by you sharing whatever episode you can. That would be wonderful. Also dropping a star rating, so that increases the algorithms and the.
Yep.
We still talk about
We
algorithms
do,
in
yeah.
2026.
We're talking about audits, mate. May as well talk about algorithms.
Yeah, whew. That's. I was just about to launch into an algorithms
Yeah.
conversation that instantly gets boring. So
Yep.
we should move on
Yeah.
to say thank you for being
you.
part of this episode.
Let's wrap it up, people.
What kind of thank you was that?
Yes, like wrap it up, people.
Oh, you're wrapping it
Yeah,
up.
I'm wrapping you up.
By
Yeah.
saying I'm Ben McKechen from Hope Mornings. We'll see you next time, Money, Faith, and Finance.
That's what I was saying.
Thank you.